Hey everybody, welcome to Trading Capital's daily analysis video here on Tuesday, May 24th. Jumping into the S&P 500 here. Initial opening, we had this massive sell pressure commence all day long until pretty much the afternoon. The markets made that little bit of a low and started rallying off the lows throughout the rest of the afternoon. But that being said, the markets did close lower, just down around 0.76%. So another down day in the books, and that's certainly the common theme. We're finding it very difficult to get that technical bounce that we have been expecting. You're still in a massive oversold condition in the short term, as well as you are at some technical support levels. So you haven't broken those levels yet. You're still managing to hold that. So technically the bounce is still the more probable outcome. If we flip to the daily chart here on the spiders, you'll notice that we are making now, after this candle and this candle, potentially a series of higher lows that could carry us forward. Now you'll see a couple trend lines here on the chart. You'll have this trend line as short-term resistance. We have to get through this one. If we get through this trend line, then I think it's a sure fire probability that we attack this gap fill all the way to this orange line at the 48409 level. So nothing has really changed. On the bullish side is that you did have this nasty sell-off all day and you reversed it to the upside and closed inside yesterday's candle. So that is a short-term bullish factor. It's also a short-term bullish factor because you pierced this longer parallel channel of support and you rallied off of that. So it's still showing that the technical basis, there's buyers down here propping the markets up as we head into that fear of oversold conditions. We did a couple things today. We bought Snapchat. So Snapchat is the big loser on the day. It has been crushed down more than 43% at the lows. And if you just look at this drop on Snapchat, it's just incredible. The fact that it was trading here at 83 and change, and with today's drop or yesterday's after hours drop, it was down at a pierce of $13, and I think it's at $12.99 now in the post hours. But one of the reasons we bought, and this chart is a little bit messy, but you can still see that there was a massive gap fill here, which we bought. And then you also had this longer term trend line. So it connects a pivot high in all the way to 2017, a pivot high kind of before your COVID crash in January of 2020. And now you have your price action in and around this range. So let me just take off the auto settings so we can zoom in. But you are into support. That being said, it is, let me just take a look at this. So you are into support. Our average on Snap right now is roughly 1260. So we did buy Snap at 1360, got stopped out for a small loss and decided to re-enter because it looks like on an intraday basis there were more buyers stepping in. So our new average is around the 1260 level, so fairly in the money now at this point. Don't be surprised if Snap can go a little bit lower. However, because one of the reasons I think Snap could go lower is the fact that you could have margin selling over the next day or two. I think there's roughly 3 to 4 days of potential margin selling that could occur, but generally people spook out and most of the people are out of their margin positions, on the day of, or that after that initial collapse. You are into a ton of support. You're oversold now, massively oversold. You can see that this is almost a capitulation candle. But the interesting thing about Snapchat is you had your earnings here, and basically you had this massive gap down on earnings right from this candle close all the way here. And then the following candle, you had this massive move to the upside. But I do think you will have, now since you're so oversold in the charts, there's going to be a mean reversion at some point. And we're just going to slowly accumulate. We accumulate at a beautiful technical gap fill here. In the event it goes to challenge its COVID lows, we'll certainly accumulate more. There might be a couple more intraday levels here around the 1140-ish level or 1110 level. So we'll continue to increase our exposure to Snap now that it's at a reasonable valuation. And I do think it has somewhat of a mean reversion at some point in time. If the markets catch a bid, which I think it will. But in the event that Snap doesn't have a mean reversion of some sort, I'm comfortable holding this trade for a little bit longer, a longer duration swing trade. But the probabilities do dictate that it's still a blue chip tech. It's generally not a. It's gonna maintain its revenue despite some revenue challenges in the future, and with a slowing economy, pretty much every company is in the same boat. But with a 40% drop, it certainly, after it's had a substantial decline from $40 here without really any technical bounces in between, and then you add a 40% drop into support, into a technical gap fill, multiple factors. It's certainly a higher probability that I'm willing to take. Carvana is another one that we entered. I entered it today around the 26.50 level. I did have a stop loss around 26.39 that I decided to cancel and stick in the trade. And one of the reasons why is, if we look at Carvana, we just made money on Carvana not too long ago. This was a trade that popped, I believe, 40 or 50% in one day for us, and that was the bounce that we were looking for. And the incredible thing is, we were in a worse average a few days ago in Carvana than we are now. I think we're holding Carvana at 40, literally about a week ago, and we sold it for a double-digit gain after it had that massive pop to the upside. Now we're in Carvana, average around 27.56. So basically, this was our average before, around this 43. We have Carvana 35% lower than it was, and I remember this is where we sold it up here, this 45 level. But we now have Carvana lower than this initial impulse move. And if you look at the distribution candle, volume candle here, this is a crazy amount of shares that have been exchanged. So there's a lot of new buyers sitting at this level here and in and amongst this green bar here that are now underwater, but they potentially could also be dollar cost averaging in, and it does show that in and around this range there's tons of support and buyers willing to step in, and we're certainly going to be a part of that. If you flip to the weekly chart, this chart is just incredible. A full bubble has pretty much been negated. You're now trading at the pre-COVID lows. So to think about, this was when the economy grinded to a complete halt. We hadn't seen an economic pause like we had seen during COVID, basically in our whole human history. And now we're trading at the lows, but yet the Federal Reserve hasn't even begun to dump their assets off their balance sheet yet. So there is still liquidity flowing in the system. Yes, interest rates are slowly tightening that, but there is still a large amount of liquidity in the system compared to over here, and you're trading at the same level. And this is on a time count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's worse than the NASDAQ. So to be on a 10-week downside pressure in a row, the simple mean reversion that you could have, even if it's to the 25-day moving average, the 50 is usually what we go off of for a mean reversion. But let's go with the 25. So we're half as bullish. If you had a mean reversion to the 25-day, look at that gain, 391%. Do I think we're going to have that? No. But it just shows you the power that a mean reversion could happen. And where do I think the mean reversion could happen? I think this would be your $66 level. I think that could certainly happen if the market sustained a 1 to 2 week or a 2 to 4 week rally, basically a month rally, which could happen at some point. The summer is generally a time for lighter volume periods, so it could happen during over the next few months. We'll just have to see how the GDP numbers come in and how the Fed remains on their course. But based off of yields falling drastically, that could be implying something on the horizon. I don't know if there's going to be a stock market crash, but if yields keep falling, stocks can get an interim bid until yields fall past that threshold where the market deems the Federal Reserve to have lost control. So we'll just have to keep monitoring that. Target is another position. We just started a position, a very small position, 1%. But Target is one of those consumer staples. People are still going to be buying the essentials that they need. But when we look at Target, this massive drop it's had in basically a couple weeks, to think it was a leading sector, and 2 weeks later, it's now a lagging sector. and a sector that's being decimated. So one of the reasons we bought Target at this level, 146.23, and we're in the money now nicely. It could have more downside. Everything could have more downside over the longer term. I do think it has downside, but I'll continue to accumulate at the next key area. The next key area we would likely pick up, add more if it continued lower, is this 134 level, 133 give or take. It's this huge gap on the charts before you had your major bullish run. But we managed to pick up here at this impulse candle, pivot high, pivot low, another pivot low, and you were into a mini gap on the chart there. So we decided to accumulate a position since you do have that capitulation volume candle as well as a massive gap on the charts. If the markets catch an underlying bid, I think Target can float all the way back up to this 183 mark, which would imply from our level a potential 25% rally, and it would still be in that oversold condition. If we simply throw on a 50-day moving average, look where the 50 is. It's all the way up there, still in the 200s. If we throw on the 25-day moving average, it's also still in the 200s. So to have a mean reversion to the magnitude of 184 and still be below all the key moving averages is certainly within the realm of possibility, especially since this is a quality company. They're still producing revenue despite their cutting jobs, potential layoffs. They're still one of those companies that are producing revenue, and that's where the value is. There's a lot of other speculative companies like Affirm, SoFi and things like that that aren't producing as much revenue or making any profit. So those certainly will dictate harsher declines, but a company like Target, I have no problem accumulating. Let's take a look at natural gas. Natural gas, fascinating price action. Of course, we did not get a downside move, which is what we're hoping for and what I still see in the charts. And again, we did not close above this candle here on a closing basis, and you can see right now natural gas futures have opened, so it's slightly up in the green, but you still are failing to break out above this candle. And what's interesting about this price action, on a technical basis, just what it looks like to me, and I could be biased because I am favoring the short side, but on a technical basis, the price action, this candle formation, accompanied by a volume analysis, shows there's massive distribution happening. And how I'm coming to that conclusion that there's massive distribution happening in natural gas, where bigger long positions are most likely dumping into new investors, is for one simple fact. Take a look at this volume candle. We just broke this volume candle. It just made a higher move than this candle in April. This candle in April was your massive reversal candle to the downside, which looked to be your all-time high. However, you did manage to make a new all-time high. So this was your line in the sand. This was your candle, your volume candle that you had to go by. And after today's price action, you pretty much had more volume on this candle here. But look at the size of the candle in comparison to this candle here and this massive wide range red bar. So this tiny green range here candle managed to have this amount of volume at the end of the day. What that signifies is that despite this candle not being big in size in comparison to this candle or these wide range red bars or these wide range green bars, the difference is that as the price was rallying up and people buying shares, money was dumping into the new investors. Volume identifies the amount of shares exchanging hands. It doesn't mean that there's a bigger move to one side or the next one. Just because you have a massive green bar does not mean you should have had a massive green candle to the upside. A lot of people confuse that difference. Volume means the amount of shares being exchanged on that day. And when you have a new volume bar record for the last several weeks, especially at the highs of the chart, and you didn't make a massive breakout to the upside, that shows that a majority, or not the majority, but since you closed positive, but a large percentage of these shares, this volume candle, was shares being sold to new investors. And as big money dumps into new investors, it really will eventually start to exhaust the bulls. So with today's price action, you just finished barely positive on the day, and you still at that double top resistance. You still have your longer term resistance trend lines in play. So at some point, in my opinion, the bulls are going to run into exhaustion move, and the sellers are going to trump that. If we flip to the intraday basis, you can see that there were massive, on the 1 hour chart, the bigger volume was coming from the sell side action, which shows that larger money was dumping in. And yes, there's a lot of buyers sitting here, but it just shows you that when you have these massive sell side volume candles starting to pick up, and you make a new record volume candle within the last several weeks, I think the biggest volume candle was here at this high. Clearly distribution is happening. And if you're on the bull side and there's massive distribution happening, and the price finished with this amount of volume, an astronomical amount of volume, but barely managed to close above the previous high, let alone the all-time high here of this cycle, not the all-time high, but the high of this cycle, that is a cause for concern in my opinion. Natural gas could still continue to move up, but you'll have your next resistance here at the top of this channel. But that begs the question is it has to get through this double top first before it can. And usually you'll see a breakout past the cycle high on volume. We did not get a breakout, but we did get the volume. But that's the concerning part, is because, I would say just by barely finishing positive on the day, most likely 40 to 45% of the shares exchange were long sellers, were people that were long natural gas for a while, now selling and exiting or trimming their positions. So we'll just have to keep monitoring natural gas. I did add a little bit of a short to our UNG here. So we shorted at 30.17. It has dropped down to $30.05 in the after hours. So again, we'll just have to keep monitoring that. So we are short the UNG, and I do think natural gas will come down at some point. It's just a matter of time and being a little more patient. So yeah, we'll just have to be a little patient with natural gas and continue to monitor the price action as it unfolds by the daily basis. But we'll just see how this distribution candle formation plays out. I think there's tons of people now selling their position and getting out. And if the recession factor takes hold, that narrative, then certainly energies are notorious for having tremendous collapses under recessionary or tightening policy periods. Thank you all for being members and subscribers. Please give a big like or comment on this video or any of the other videos. It will really help keep promoting us, and it will really help me continue to produce free content for everybody, and I hope everybody continues to learn and educate. And if you have any feedback, I'm always happy to discuss. But that is it for tonight. We'll see how the action unfolds and continue to be on the lookout for more trade alerts. I would like to see that bounce come into play over the next 1 to 2 weeks, as we still are on that now, I believe, an 8-week time count on the S&P 500. So let me just quickly analyze that. If we flip to the weekly chart, 1, 2, 3, 4, 5, 6, 7. Sorry, we're on a 7-week time count. This could still end negative on the week. We have 2 days left, but I do think we can potentially finish positive on this week and then carry some momentum into next week before the Fed meeting in June. So let's just monitor the price action, be on the lookout for alerts, and continue to ready to take trades in this market.